I remember seeing these people and they were working far harder than anyone else I had seen before. They weren't working to buy the latest trends, a new handbag, the latest fashionable pair of shoes, but they were working to put food on the table and survive. They were there ultimately supporting their families. And at that moment, I knew something had just snapped in my mind. Welcome back to the show. Today is going to be a very special episode. I'm going to fully expose my net worth, my income, my portfolio, and all of the holdings, as there was some confusion around that, and you guys have expressed interest in finding out exactly all the details. I was editing and it's currently 5 a.m. Sunday, so 4 hours before this video is meant to be up. And there were some sound issues. I promise you they do go away towards the end of the video. So make sure to watch right until the end, as I'm going to reveal everything. I'm also going to talk about all of the holdings in the portfolio and my goals for financial independence and ultimately retiring early. And all I ask in return is that you drop me one of these for the YouTube algorithm. I'd also like to thank all of you that have supported this channel since I created it in early April this year. We've nearly got 1,000 different people in this community, and it is so incredible to see such a significant size so early on in this journey. And I'm subsequently not very far from monetization. It means a lot, and once again, I thank you so much that for some reason you guys would like to watch a younger lad talk about stocks on the internet. The FTSE 350 has dropped by 3% this week, and this is over fears of a potential second wave, things I've really heard a million times before. There's probably a lot more details to it, but I'm guessing reality's starting to hit as these earning reports were released. Except for companies like Apple and Amazon, who have absolutely destroyed their analyst predictions and are now trading at like 12% higher than they did at the start of the week. My total portfolio value is around £9,700. I'm currently up 4.42%, which means, in fact, I'm actually beating the FTSE 100, the largest UK market, since I started the portfolio in April, in which in this time the FTSE 100 has returned 3.39%. However, I am still trailing the FTSE 250, which has gained 8.76% in this time period. And in fact, I've actually spoke about this on my Twitter page. And if you're interested in that, please feel free to drop a follow at Osborne Foreman or click the link in the description below. This week, one of my holdings, Softcat or Software Catalog, which is an IT infrastructure and IT added value seller to companies in the UK. And this company had made a deal with SmartSpace. And this deal meant that Softcat will now resell their pandemic work from home programs, which helps businesses adapt to the changing situations and allows them to effectively have their employees in a better position than they would be without the program. And in this time, SMRT has rallied around 51% and Softcat is around 8% up. I only hold 2 shares in my portfolio so far, but in future I really plan to ramp this up. I'm waiting before the earnings report in October, and before that time I'm going to try and build up the position to 15% of my total portfolio. This, combined with another stock in the portfolio, will create a 25% tech allocation, which is a very resilient and defensive sector that I have seen in this pandemic, and it's one of the sectors I understand the most clearly. My current average price on Softcat is 1,175 pence per share, and no doubt I will be buying more of this even if it continues to rally. London Stock Exchange Group, and this might be a surprising one for people because it is a stock I have recently acquired, and this was because I had to make the tough decision to finally just cut Aviva out. They had fallen so much this last fortnight, it's ridiculous. They had lost around 15% of their value in the last 2 to 3 weeks, and I've decided that despite their earnings report and their plans, inevitably that share price is still not going to do much. And at the moment it seems like a liability. I no longer believe that Aviva were worth that intrinsic value. And you know what, I just cut it there, decided, you know what, I'm £67 up, I will leave it and I'll reinvest it into London Stock Exchange Group, which I did. Now I own 15 shares of the London Stock Exchange at an average price per share of £84.29, which is on the higher side, but I will look forward for finding opportunities to average down. As they are a lower beta volatility stock, meaning they'll drop or fall or rise less than the overall market, this gives them a defensive position in my portfolio. And at the moment, or before this, it was more or less someone could sneeze and the portfolio would hit 10,000, and in which it did for 2 days this week. During Tuesday and Wednesday, the portfolio was sitting on 5 digits, considering I started the portfolio in April. And yes, I did deposit a lot in this time period. I only started the portfolio with £125. Once you start investing and get that snowball rolling, it continues to go. It's incredible. Anyway, London Stock Exchange released their interim 2020 report, and basically they'd managed to increase their overall revenue by 4% and their total income by 8%, and managed to grow their adjusted EPS by 11%. There was a lot of speculation around them acquiring a company called Refinitiv, and this is basically a technology infrastructure for finances, so a fintech infrastructure company that monitors the markets and does business with many different clients and countries. And effectively, London Stock Exchange have confirmed that they've passed some regulators, and they're even weighing up the idea of selling off their Italian market side, which is valued around 30 billion, and that would go to perhaps the European regulators so that the London Stock Exchange Group could acquire Refinitiv. And believe me, this would be a huge move for this stock, and it's probably why the stock price is as high as it currently is. This is a stock I want to create a position of 15% because they have a dividend growth, especially in the last 5 years, that is incredible. John Little, who is actually the CEO of Boohoo, may be under a lot of stress as of late, as a few days ago, or maybe even a week ago, they'd released a report that John Little's son had actually died, and this was due to a morphine overdose. This shouldn't impact Boohoo that much because it supposedly happened in April. It is something to think about. If your child dies and you're continuing work, then maybe there might be something going on in your head, and it may affect or it may lead to irrational decisions. And so whilst yes, I don't think anything will happen, I do think it is worth keeping in mind, as management could be a bit shaky, but since this time he seems to have been fine. But this could further contribute to the potential risks of Boohoo. Whilst no, it's not modern day slavery, it could lead to some more governance issues, which a lot of the big institutions believe that this company indicates. Regardless, Boohoo remains to be my largest position, taking up 53.9% of the overall portfolio. As bullish as I am on this company, and I really do think they'll do well, I am not buying any more shares. There is way too much of a systematic risk. I'm going to leave this for a while. Hopefully over the time period, this position size will drop to 30% of the portfolio, and hopefully to increase the chance of that happening, I'm going to rapidly increase the other positions so that this comes down in line with the rest of the portfolio. I hold 2,000 shares of Boohoo at an average share price of £2.46 per share, and I have strong beliefs for this company to grow, as online retailing for one is a great industry to continue growing in. Also, if we are in the biggest recession of my lifetime at least, then I do expect people will need to continue buying clothes, but maybe they'll be buying the cheaper clothes. Since creating the portfolio in April 2020, I have bought and sold so many different stocks, as it is part of my learning process of finding out which of these companies are good and which aren't. But this has also led to a lot of confusion to the people watching this video right now, as they don't know if I still own some of these stocks. Do I still own bonds, for instance? And I've purchased over 25 different companies, ranging from Britvic, which I had sold due to them cutting their dividend or suspending it. National Grid, when the Office of Gas and Electricity Markets presented a significant risk to their future revenue. And Diageo, in which I actually sold that just to reinvest into Boohoo, as I didn't really want that defensive position. Excellent company still. And I've made the decision that ultimately I'm definitely not capable of picking 10 excellent stocks. So if I reduce this number down and increase my overall exposure to each one of my companies, then I have a higher chance of outperforming the market. And I also believe that I can understand these companies more because as a smaller group, I can research these more thoroughly, build up my understanding, and therefore if the stock market crashes again and my stocks lose 50% of their value, I'll then be able to rationally think, right, it's 50% down. Is this below their intrinsic value? If it is, I'll buy more. But you may be asking, how am I diversifying if I only own 6 different companies, or my six stocks for success? Good bit of sibilance there. As various people, famous investors, people, and articles have all roughly suggested that you need around 15 to 20 different stocks. But ultimately, it depends on your risk tolerance. I'm okay at my current age with losing, the biggest position, which would be, in the future, 30%. Even now, 54%, I wouldn't mind too much. Yes, it's a lot, but it's a learning lesson. I don't see that the current money I have will appreciate that much in the short to medium term. And so if I lose it, it's less of a concern. Whereas when I'm at a bigger stage, or where I've got 6 digits in the portfolio, for instance, perhaps then there is more risk to it. But with the diversification, I've selected carefully the companies that I own. So they all intertwine in different parts and benefit from different situations in the market. And this way I can further increase my understanding and know which stocks are really doing well. But also means that if one of these stocks isn't doing that well, I could potentially sell it. But before talking about my final positions and my net worth, I'm going to talk about why I only held bonds for a short time period, right? Bonds were an excellent addition to the portfolio, but at the worst possible time. This is a time where you should be looking to increase your risk, as there is a lot more potential upside than there is downside. And this is because when I bought bonds, we were down 25% year to date in the overall UK market. What you would like to do, or what I plan to do, is buy bonds once we are at the end of a bull run. And obviously I could never know when there is an end of the bull run. But when I start to think, you know what, equities are quite high. We've had a long bull run. Right, the cash that I have here, I'll start building a cash position. Perhaps I'll start buying into bonds. And at that point, perhaps there's negative yield curves. That's when it seems a little bit more important. Ideally, I'm going to invest into long-term bonds because then they react more inversely to market sell-offs. The market goes down, the bonds go up. I sell out of the bonds, reinvest into the stocks at a low, and therefore gain from the lower stock prices. And so at the moment, it's kind of silly. Bonds at the moment, they don't really yield much, and equities are quite cheap. There's no point in me holding them for at least this time period, but that doesn't discount the idea that in the future I plan on doing so. However, I do plan on having premium bonds, although that's not really investing, that's more or less emergency fund. The two companies in the portfolio that I would like to have the joint lowest allocation are Ashtead Group and Halma, for which of them I'd like to take 10% of the portfolio each. Historically, they are excellent companies with fantastic track records, such as growing and also increasing their dividends extremely well. Although my only concern is their future growth potential, and I am worried that this may start to slow down in the future, and so that's why they've got a slightly lower allocation, as it's less growth and more dividend play. Currently, I own 26 shares of Ashtead Group. They are a construction company that leases equipment to construction firms. So if they're building houses, perhaps they need a cement mixer leased, perhaps they need a digger, for instance, or perhaps they need to demolish certain buildings. So long as the construction industry is up and running, Ashtead Group stand to benefit. Whilst they are more exposed to the United States, they do have quite a significant place in the UK market. And so long as there is space on the earth and people to live in that space, I do believe construction will continue to steadily increase. And despite their higher than market average volatility, I still see Ashtead Group as a defensive hold because they're more than capable of growing their dividends and also are well diversified. They are now looking to the leasing different products such as tractors and other various equipment. My average price per share is £25.82 each. This position is currently down 5 to 6%, and hopefully I'm going to get a good deal in the next week and buy some more of this stock. I wanted to take 10% of the portfolio, and then I'm happy. That is a strong position that can sit there, which means I have another 3.5% to add to this position from the overall value of the portfolio. Halma are an excellent defensive technology stock which provides solutions in the safety, health and environmental sectors. They've had 41 years of consecutive dividend payments, and one in times of recessions you can rely on. In fact, they'd managed to grow their dividend by 5% in the last month. I consider this to be my lowest risk stock. This is a well-developed company and a company that has lasted since 1894. I currently own 15 shares. This isn't much, and I will need an additional 6.5% of the overall portfolio value into Halma. It's a position I'm going to build slowly over the long term and then have a consistent dividend payout and also a defensive stock that doesn't drop as much as the market. My average price per share is £22.50 and I'm currently down around 2 to 3% currently in the market sell-off. I'm not worried about any of this except hopefully getting it at a good discount or getting these low prices. However, the position I want to take up 20% of the portfolio, and by far is the best company in the UK market, is GAW. The Games Workshop is by far the stock I understand the most, as I am likely very part of that consumer base. Whilst no, I don't buy the miniature figurines, I was part of the online area in which they were selling their royalties to use the brand Warhammer to online gaming companies. And I'd played a few of these games and realised that the universe is so expansive and that it is very, very difficult for people to get through this moat and attack the company or compete with them. And it pretty much leads them to a situation where they almost have a monopoly. I own 25 shares at an average price of £81.64 per share, and I will buy on every weakness that I witness in the stock market because this is a fantastic stock and company to own. And this is a stock that I actually plan on buying and holding for life. Many of you that watch this channel have commented asking about my financial situation, like how I was able to save so much when I'm on an entry-level wage. So I'm going to discuss my exact income, my net worth, and also my financial goals. But firstly, 60% of you aren't subscribed, so please consider subscribing as it doesn't cost a penny. Thank you. I entered the working world at a later age, although I had one ability which was working for me, and that was the inherent ability to save. I wasn't given pocket money on a weekly or monthly basis, but rather for my birthday and Christmas I had to request that I could have money as a gift. Since my birthday is in late November, this would mean that it would all come at one period in the year, and then I would have to budget and save depending on what I wanted to buy over the course of the next year, so that I was able to buy things that I liked, but also save it so that I could go out and do things with my friends across that time period. And this actually continued whilst I was in education up until the age of 19. I would budget around £200 to £250, try my best to make it last a year. Sometimes I would get more cash throughout the year. However, I never relied upon it, and I just saw it as a lucky windfall to have. My methodology with dealing with this made me very anti-consumer, effectively meaning that if I see a deal or a discount or a yellow label, I'm going to think, why is it on a discount? What are they trying to sell it to me? And do I even need this product in the first place? Most of the time, I'm like, they've probably slashed the price by 50% to make it look more appealing. Therefore, it's a sales tactic to sell me some product that I don't even need, like a toaster, even though I've already got a toaster in the house, for example. And this also has meant that like some of the clothing I own, I've had for 5 to 6 years. For instance, this shirt here, which it's not that fashionable, but it's comfortable, I've owned for 6 years and it still fits me. So clearly puberty hasn't hit yet, maybe in the next 10 years. However, once finishing education at the age of 19, I decided that I no longer wanted to regurgitate this information from textbooks and then write it down on an exam, not based on your skill or intelligence, but based on how well you can memorize a book. So I quickly started to look for ways to start generating wealth. And that's where I realized that I actually enjoyed doing it. I stumbled across many of the things that likely you have stumbled across as well, such as trading, swing trading, day trading, but also sports betting, and obviously long-term investing. At around the same time, I applied for a job in a local pub, a place that I actually still work today, and I get an annual income of around £13,000 per year, or around £250 per week. And in fact, one of you actually recognised me whilst I was working the other day. It was a really weird experience, but if you do see me in public or at work even, please say hi. I'd love to speak to you all, and whilst just remember that I don't own my time whilst working, I would still love to meet you and have a chat. Anyway, this has meant that I've had to reduce my time and energy into spinning all of these discs. And I've decided, you know what, social life I can cut away and place that time into working more hours and learning more about long-term investing. And subsequently, the people I knew from school were all really heading to university, and they continued the trend of going out drinking every weekend and going on common nights out. And so what I've had to do is kind of cut that network away. And I don't really speak to them that often, but I do see them once or twice a year for a night out and catch up. That combined with being fortunate enough to live with a family. I live at my mother's house, and in which there is a freezer with food, and there's also gas and electricity bills covered. I pay a small portion of money as rent, but it's only around 15% of my weekly salary, which means I have little to no expenses and I'm in a perfect situation to start investing and generate wealth, even if she thinks investing is gambling. And I have tried for hours to explain that to her. Time that I will never get back. But because of this, I've been able to save and invest around 80% of my overall income, and therefore can put more time into increasing my wealth and trying to build it as rapidly as possible. I remember when I travelled to Thailand. Well, I really should have, as it was only in February this year. And I was also 4 days away from being quarantined in China. Anyway, I remember seeing these people and they were working far harder than anyone else I had seen before. They weren't working to buy the latest trends, a new handbag, the latest fashionable pair of shoes, but they were working to put food on the table and survive. They were there ultimately supporting their families. And at that moment, I knew something had just snapped in my mind. I realised that I'm going to work as much as I can, and now my brain will not let me live that down. I'm not going to get complacent. I'm not going to allow myself to get comfortable with my finances. I'm not going to settle for anything lower than the best. Whilst I love to work, this also does mean that it is hard for me to rest. And in times of where I'd like to just have some downtime, my head is going to be telling me, look, this task needs to be done. This task needs to be done. We live, we die, that is life. C'est la vie. Now is the time to work hard and build wealth. No matter how far you make it on this cycle, enjoy life. Which brings me on to my net worth. I'm currently 20 years old, and in 3 months in November, I turned 21. At the end of August last year, before I had started work, I had a total net worth of £7.92, and that was all in cash, sat in my bank account after a festival. Now that I've been able to save, invest, and also make strategic purchases about products that will last me a very long time, I've been able to generate and change the path that I was on. I now have a total net worth that is 5 digits. And if I only include liquid assets, which are items that I could sell pretty much immediately and have cash value for it, I have my portfolio holding around 90 to 95% of my total net worth and a 5 to 10% of cash sat in bank accounts, emergency funds and other things. Which brings my total net worth to around 10,500, that has been rounded, and a credit limit of 5,600. However, that's not really relevant, but if you are curious about that, drop a comment down below. Or perhaps it's a topic for another video. And since the job market is now saturated with plenty of high skill workers from head offices of various companies making people redundant, it's going to make it very difficult to find better jobs to get into. I'm sure very entry-level jobs will still exist, but it has meant that I've kind of paused my search for a new job. And originally, just before lockdown, I was looking into becoming a trainee real estate agent. However, obviously, with the way the property market's going, I'm probably going to have to give that a while. So now, I haven't given up. I'm still looking to increase my income streams. Technically, I have 2, which are my job and the portfolio. But I don't really see that as income, even if I get dividends and even if I make capital gains. It's inside the ISA shelter, that's long term. If it technically is income, but I don't regard it as that because income would be something that I could spend or save further. And I have extremely strict goals to reach over the next few years. Firstly, by 2023, I want a net worth of 100,000, pushing my ability to generate income to the limit and also my ability in picking the correct stocks in the market. And I'm also trying to reach financial independence by the age of 30. I don't necessarily want to retire because, as I said, I love working, but I would love the ability to be able to live off of my investments by that age. And there's people that I've seen and spoke to have just laughed at me for saying that. They don't fathom the idea that this is actually potentially possible. And this wouldn't be like a fat fire, I believe, where you'd have loads of money to live off of, but enough to financially support my bills. And just to have that security in the back of mind is what I would really appreciate. To the 2 of you still watching this video, I want to once again thank you so much. We are so close to monetization, and hopefully when that happens, I'm going to try and create the ending cutout, and that hopefully in the future I can create my portfolio and make it more public to the viewers, and also potentially create a Discord in the future. Thank you for watching. You are all awesome people. Have an awesome day.